Per usual, living on this channel is for educational purposes only and is not intended as financial advice. Sunday, setup Sunday. Should be an interesting week, end of the month, end of the quarter coming up here as we roll on into Q4. Potential government shutdown stuff to deal with, which I'll talk about. But I think the big question on everyone's mind is, how real is this weekly edge-to-edge trade on Bitcoin? For all the reasons I'm about to tell you in this video, I don't have a ton of faith at the moment that this will play out as expected. I think the base case expectation currently is that we do break down. So you'd basically get stopped out of this trade. This should probably fall out of the cloud and should probably, at the very least, retest the red line here, the key June. The conditions at the moment, just not there. I would argue, and I will argue in this video, but I know that's the first question on most people's minds as we roll into the next week here. The idea being eventually we're going to go to 42.5, 42, whatever that is. In the moment, I would be extremely cautious using that as a long entry trigger. As far as major events this week, we've got a few Fed speakers, Powell speaking at the end of the day, Thursday, so that should be fun on the Friday open. Then we've got PCE readings. And then the week after that, we've got a bunch of employment data, unemployment data, wages. So it should be an interesting first week in October. And like I said, we do have a government shutdown potentially coming through here at the end of the month if Congress does not pass appropriations bills. These are the previous government shutdowns. Based on my own internal estimation at Kraken Pro Capital, a government shutdown is much less impactful than a debt ceiling showdown, which we just had a couple months ago. So we're not seeing some crazy, bond stuff going on the yield like we did going into the debt ceiling, where people were buying the extreme short dated treasuries because they didn't want to risk a potential delay in payment on a bond, right? We are seeing yields continue to rise, which is really good if you're in short term, short end of the curve, getting a yield on your cash. We're not quite seeing the craziness we saw going into May, right? Where bond yields were all over the place. We'd still have a yield curve inversion, and arguably we haven't even started to uninvert yet. And ultimately the recession typically comes way after the uninversion. So we're not seeing unemployment rise just yet. That may change next week when those numbers come out. And right now it's definitely still all about the beginning of the yield curve, short duration. And again, like I said, we just had this debt ceiling crisis that led to downgrade by Fitch. But this time we've got just a plain vanilla government shutdown. I'll leave this stuff in the description for anybody who wants to read further. But the government's not going to default. Now, the last time we had a government shutdown, a very interesting time in Bitcoin's history. On the top half, if we look at the S&P in the white, Bitcoin in the orange, versus rates on the bottom half, U.S. interest rates. Post 2017 high in Bitcoin, we had basically a year of extreme consolidation, a bunch of ETF denials. And towards the end of the consolidation, when it was basically dead flat, we saw legacy front run to the downside. So legacy sold off. Rates came up. There was a US-China trade war. And on the crypto side of the house, we had Tether uncertainty and insolvency issues. We had BCH civil war and a fork and a minor battle. So collectively, it wasn't conducive for a bullish environment. And then the government shutdown happened. So if we do get a government shutdown, it'll probably last, 10 days to 30 days. But the market was already down so much at that point in 2018, it arguably didn't even matter. The damage is already done, right? In this case, currently, we're on the verge of rolling over across the board. Bitcoin is holding strong so far. But if legacy continues to roll over, which I think it will, then I certainly don't expect Bitcoin to continue to hold for the next couple of weeks here. And just in case you're curious and want to relive 2018, here's an article from PBS talking about the 6 factors, but it's very familiar. FANG overconcentration, FANG dominance, tech regulation, all very, very familiar time as a flat circle type stuff. Then we had this super bizarre, this was after the move happened in the markets, where Mnuchin came out and said the banks were completely solvent or something. Like, just very, very bizarre situation. Anyway, before I get to more charts here, let me talk about today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. And as I usually do, I check the volume on Kraken. And for once, Bitcoin is actually on the top of all the pairs. So we're not seeing Tether USDT USD lead. We're not seeing Tether Euro lead here yet. And one thing I noticed as I scrolled down, Melon Enzyme is up 33% today. Couldn't really find out why. Curve also up 11%. Enzyme is a tokenized hedge fund kind of portfolio management tool. So anyway, if you know anything about that, let me know in the comments because it's very interesting. Let's talk about DXY. DXY going on its potentially 11th green week. We are generally inverse to the DXY, which is shocking that Bitcoin has held where it has for as long as it has in the face of DXY strength. If we look historically, post-halving, DXY weakness has really helped propel BTC through a bull trend. So we're still pre-halving, we're still in the do whatever zone, right? No big deal. By the way, DXY in 2018 into 2019, when the government shutdown happened, didn't matter. Didn't affect DXY at all. So as we all know, higher for longer. At this point in time, it doesn't really matter where the DXY goes. Honestly, how low even Bitcoin goes. 20K, totally fine. I don't think we go to 15. I think we attempt to revisit 20 to 22. So let the dollar be strong at this point in time. It's not Bitcoin's moment anyway. Our moment is post-halving, typically. Here's DXY on the weekly cloud. And if this were anything else, you'd say this looks extremely strong. Don't have a bullish to get across yet, but this could easily regather strength and have another run to 112, 114. I think that would be extremely painful. And I think that's how we see Bitcoin into those low 20s when eventually it's just too much to take, right? Here's DXY with the daily cloud. Again, it's super strong. TKC clamp, sure. Maybe this pulls back a little bit this week finally on a bear day with RSI, but overall trend remains very much intact. And we may remain very much in trouble on this side of the house. Now, it is unusual that Bitcoin has a positive September. We've got a week left to ruin our positive September. ETH, on the other hand, also negative on the month. Historically has had negative Septembers, very deep negative Septembers, might I add. So I think this week will be interesting for Ethereum, not because it's Ethereum, but just because it's a riskier digital asset and seasonality is not on its side. If we just look at the Bitcoin cloud, we're below the cloud still. Once we're above 28, we're fat and happy with a much higher likelihood for an additional move to 42, right? But while we're below 28, certainly don't expect higher highs anytime soon. It is somewhat of a miracle that we've even managed to not break 25, in my opinion. Something else I noticed just poking around last week, if you look at Bitcoin versus the euro, now we all know the DXY is a basket, mostly the euro at around 58%. Just looking at sort of the phase shift of euro leading Bitcoin historically post-COVID, sometimes it's a month, sometimes it's a year, but that's really tightened up recently. Euro USD bottomed in like October, we bottomed in November, and Euro USD looks extremely weak to me. I don't know if it's going to continue to break down this week, but this does not, tell me what this looks like. Okay. It certainly doesn't look like bullish continuation or bullish reversal. So to some degree, we're all just trading the euro right now, and we're hoping the Eurozone turns itself around for our sake on the crypto side, which I'm not bullish on the euro. I'm not bullish on Europe. I think they're going through it way more than we are on this side of the pond. So that continues to worry me. Either we're going to recouple in a strong way to the euro, or this is going to continue to widen, right? And this relationship is just going to decouple completely. I'd assume the trend is your friend, and I'd assume we're going to recouple here, which is why caution is definitely advised. Not investment advice, but it's advised. On the pitchfork, we're still in the pitchfork. That's no big deal. VPVR has volume support at around 23. And then after that, it's 19 to 21, 19 to 22. But a little bit of a minor miracle. Now, we do have a bunch of deadlines coming up in October. The SEC deadline against GBTC is mid-October. The BlackRock second deadline is also mid-October. So that would be the Hail Mary white swan if the BlackRock ETF gets approved this year. I don't think it can happen, but there is a non-zero chance that that does happen. So, it's hard to sort of load the boat short on Bitcoin here, knowing that that's a possibility and knowing that we've held this strength so far. Now, here's another one similar to the euro. If we look at Bitcoin relative to inverse 10-year real yield, so that's the 10-year minus CPI, basically. As we go down here, real yields are getting stronger. And again, you can see, as expected, pretty high correlation with real yields. And real yields are getting stronger. So will we decouple? Will the alligator jaws, or whatever you want to call this, refuse to close? We'll see. But I would like to think that yields probably trump Bitcoin here. Most likely. Again, very cautious. Same inverted real yield. And then if we look at that relative to total 3, which is the altcoin market. Okay. Now this is still pretty highly correlated, and I would expect the altcoin market to break down in all sorts of ways. Many coins have sort of descending triangle pattern. And if real yields continue to pick up, which many people are expecting the 10-year yield to continue to rise, then I would certainly expect alts to break down, right? So definitely something cautious to watch there. And then lastly, on the inverted yield fund, if we look at 10-year real yield relative to USDC and USDT market cap, very similar picture emerges there, where stablecoin market cap gets less important as the real yields rise, right? Why risk any money in a stablecoin and DeFi when you can get a pretty decent real yield at this point? Then if we want to get super fun on the legacy side, if we look at the S&P relative to same thing, 10-year real yield inverted, massive divergence here, right? What's gonna break first? Again, this leads me to believe, yes, the S&P is going to continue to break down, and this is going to eventually normalize over time. You've got a lot of AI juice in the mix at the moment. So I do think that'll come back down. NASDAQ, same thing, even wider, despite being very tight over the previous year. And then another fun one I noticed somebody posted. This is Jolt's job openings versus the S&P. Another super wide divergence here. Most of the time, this is pretty tightly correlated, and it is diverged in the complete opposite direction, right? So if this does snap back, it's going to be violent. Let's talk about ETH. Still looks weak. Still looks as bearish as it has looked for the past, 16 weeks. It just does not look like it wants to have anything related to bullishness here. It refuses to hold highs, continues to break down, threatening to get below this volume support, and definitively threatening to break down below the ascending triangle support. So if legacy breaks down, if Bitcoin breaks down, ETH will certainly break down. And that's why I like 11 to 13. Eventually on ETH. ETH also doesn't do as well in the second half of the year. ETH actually does better in the first half of the year. So it kind of makes some sense to me that ETH just has a terrible rest of the year and does better post 2024 or post 2023. Another interesting note that kept coming up last week is that all the terrible legacy crashes have happened in October for the most part. So that's also something we have to dodge on the crypto side of things if there is a legacy meltdown in October. As far as looking at the alligator fractal stuff for ETH, it just continues to print short signals over and over and over again. It's printed a short signal since July and continues to print short entries. The most recent short entry as of a couple days ago. Stop loss is somewhere around 1650, let's say. So this still leans very much short on the ETH side of the house. And then there's BNB, which has all sorts of issues, of course. The entire ecosystem is waiting for BNB to get its shit together, essentially. Either the DOJ is going to come after them, or there's got to be some closure and finalization here. But they're on a very big level with very little support until 50. I mean, that's just the technicals. Looking at news, looking at event-driven volatility, let's just say, that could also tip this lower, and that could help tip crypto lower on its own, in a similar way that we went lower, in 2018, when we had stuff on our side of the house, right? We had Tether issues, we had BCH drama. This could be BNB drama that helps bring us lower, right? So that wouldn't surprise me if that adds on to the story here of what's going on just across all the markets. The one chart that actually looks good is Monero BTC. I don't know why. I don't know if this is like, a rise in ransomware. I don't know. I don't have any good rationale, but the technicals look good for this. I don't have the proper scale on here, but you get the point. It's a pretty decent pattern to watch. So that's the one bullish trade I'm watching this week. And I know a lot of people ask about Link, so I'll just bring this up. Still ranging, not necessarily a buy for me until it's above 850, something like that. There has been a lot of whale activity pulling Link off exchanges, which is unusual in probably a good way. So if this does outperform many months from now, that could be one of the reasons why there's just no more float on exchanges, or, people are accumulating it. That's what it looks like based on the on-chain activity. Then real quick, let me just talk about the S&P again. I know this is a mess. This looks like, Las Vegas pre-ransomware attack where all the neon lights are on. But the TLDR here is that we were bullish at the beginning of the year. That bullishness has certainly faded, and now we've printed this massive reversal pattern with a bearish edge-to-edge move through the cloud. No bull div yet on the daily, and a very likely move to 4,200. The 200-day moving average is there. The inverted head and shoulders neckline is there. And we're still higher than we were when the Fed first started hiking. So even after all this drama, AI, whatever else, we're still higher. Now, that'll probably come down this week, but the S&P has done okay this year. And I'll talk about it more tomorrow when I look at the macro charts. But unless you're part of that Elite 8 club, for the most part, you're flat on the year, and your return is actually worse than Treasury yield right now. So talk about brutality. But there's head and shoulders all over this. There's extreme bearishness all over this. Maybe this bounces at the 4,200 mark and fills this gap, but I wouldn't expect some massive bullish move to retest 4,600 anytime super soon. And the Qs look essentially the same bearish edge-to-edge move there, head and shoulders, all sorts of nastiness. So unless all the markets bounce together and the government shutdown stuff just goes by the wayside, it doesn't happen, doesn't materialize, Binance is safe, whatever, right? We get an ETF. Those are like we go to 4,200 soon bucket, okay? But if that stuff doesn't happen, I'm expecting lows just everywhere across the board. So it should be an interesting end of the month, end of the quarter here. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.